Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Thursday edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim and TD Ameritrade with Spencer Israel. Here with Joel Elconin and Dennis Dick. We got some earnings today. We got earnings on the retail side. We got Shake Shack. We got Twitter CFO leaving. We've got a rally in the financials. We got the gun makers not doing too hot, so we'll get to all that. We'll also get to our guest at 8:35. He is Greg Harmon. He's the founder of Dragonfly Capital Management. Joel, how you doing today, and how are the S&Ps looking for you?
Well, here we are on this Thursday, and the S&Ps are continuing this tortuous rally. We're over 150 handles above that low, but we'll give you the numbers. Only one number matters here, and that's 2182.75. That is the all-time high tick in the S&Ps. In order to post a new close, 21.78. So got a shot at that today. We have crude rallied a little bit yesterday, giving some back today under $45. And metals are getting a boost, even though Stanley Druckenmiller sold all his gold. I think that we saw that, but still rallying here. Just a really busy day yesterday. We got a lot of stocks moving. Dennis, how are things looking from the after hours and pre-market perspective?
Do you think anybody saw that coming yesterday, that Trump rally? Like, we were down, just look at this. We were down, limit down 5% on the S&P futures, and we're trading down 107 handles. And not only do we rally the whole thing back, we close up on the day. Now we have follow-through rally, and we're talking about all-time highs. This is unbelievable.
Unbelievable. You cannot predict the market, that's for sure. And I thought for sure off that open yesterday, I was thinking, okay, well, we're 100 points. There's going to be some profit taking. I'm trying to buy this thing under 2,100. And actually, the opening tick of the day session was 18.5. The low was an 18.25. Tuesday's low was 19 even, and if you didn't jump on them then, you were left in the dust. But a great rally. A lot of stocks were participating in them, and here we are, 10 points away from the all-time high.
And not all stocks participated, but a lot did, and the financials were just blowing it out of the waters. Look at Citigroup, new highs on the move. Bank of America, new highs on the move. Goldman, Morgan, even Wells Fargo. This one puts it in perspective. Look at Wells Fargo. Everybody hated it a couple of weeks ago there. They were concerned, even we said on the show, the branding. Boom, there was no branding issues yesterday. Wells Fargo opens up near the low at $46, runs all the way up to $48.61. This is Wells Fargo. The stock's within striking distance of its highs there, which is back at $51.
Yeah, a little bit.
Unbelievable rally.
Yeah, more than 50%. Sleeping giant there in Wells Fargo. Still got a ways to go get back to that recent high at 56.26. But on days like this, when you get those big moves and you back off, try and see if that daily high correlates with another daily high. So, for an example here in Wells Fargo, we had a high yesterday in the 48 handle. Let's give you the exact number here. High yesterday, 48.61. You go back a few sessions, had a high at 48. Let me give it to you. 48.64. So there's your major resistance in Wells Fargo.
Lots of earnings reports here to talk about this morning. I don't know where you want to jump to, but we could go over to the Shake Shack because it's all about sentiment here now. Everybody's buying everything. So no matter, it's funny. You report a week ago there and everybody was hitting you. Now if you're reporting, people are buying you because they'll find a reason to buy it. They're hungry to buy everything here right now. Shake Shack, S-H-A-K. Spencer, how do they do?
They beat by a penny, 15 cents versus 14 cents. Revenue 74.6 versus $69.33 million. Comps were up 2.9%, and that's a good deal. They also raised their fiscal year 16 revenue guidance slightly, about $10 million. They say comps will be 4 to 5%, up 4 to 5%.
Yeah, I'll say it. If Shaq would have reported the same report a week ago, I think they hit the stock. But again, it's all about investor sentiment coming into the reports. And like I was saying, they seem to want to find a reason to buy, everything here. And Shake Shack with a big pop here. Joel, what are you thinking?
I'm thinking that they took the sign down that they may be opening one across the street. I don't know if we had
Oh,
any.
that was misinformation. The sign's still there.
The sign's
They're
still
not
there?
Yeah.
opening it? Or they
No,
are
no,
opening
no.
it?
Okay.
They are.
Yeah, Dennis, maybe I can get one of those 3 lunches that you owe me. Yeah.
Two. It's
Uh,
two.
okay, yeah, two. Two and a half.
And I want those two steak dinners. Where am I getting
Anytime,
those?
man. Anytime. I'll take you out to steak. What's it called? Steak and
Steak and shake you would do that too, wouldn't you?
3709. That's your pre-market high. Backed off a buck. 37 stands out on the daily chart. 3715. That was your high on September 7th. That might be a good number to look at if we go into rally mode in Shake Shack.
Also reporting earnings there last night was Mylan Labs, MYL, and the stock rallied a bit, but then it started getting hit. There was actually some news that came out after the earnings report as well. MYL, what'd they do, Spencer?
Mylan Q3 EPS a buck 36 versus a buck 45 estimate. Revenues of $3.06 billion versus $3.12 billion, so a miss there on both. Their fiscal year 16 adjusted EPS came in line, and their fiscal year and so that came in line. The news afterwards from the call was that they see generic drug pricing erosion near the mid single digits for the remainder of the fiscal year.
Again, if they would have reported here a week ago, they would have hit it. They missed on the top, missed on the bottom. They're seeing, the erosion near the mid-single digits, so which isn't great news by any means, but they're looking, on pullbacks here to buy stuff like this. And here you are, Mylan Labs is actually trading flat, so a lot of not great news for Mylan. But investor sentiment here is to buy dips again, and Mylan Labs dip was bought last night.
Did you get down and dirty in this last week, Dennis? I know you were combing the
I wanted
ditches.
to. I
Yeah.
did not buy Mylan Labs. I did buy a couple. I bought just the guest that we had. I remember Lynette LCI. I did buy LCI last week, and that was a great buy down in the 17 handle here. It's already up at $20.30. So that one was good. I bought a couple things, other things last week, but I do like the drugs. And I do like Mylan Labs here on pullbacks.
What you have to look at here in Milan, and everyone's going to know because they've been listening to the show so long, you had a rally from 33.60 up to basically 40.60. 7 handle rally, 3.5 from that. That takes you to 37.10. I like to see it there. Pull back to that $37 area, 50% retracement. Maybe build a little position there. You got your out at the low of the move there. So that's what I'm looking at here in Milan Labs.
Taser, TASR, also rallying 8% on their report there last night. Huge rally for the stock yesterday. Goes from 22 up to 24. Continuing the party here today, 25.67. Spencer, the numbers.
Q3 EPS 7 cents, that beat by a penny. Sales 71.9 versus $59 million, so that's good. The CFO is leaving the company, and they also, I'm sorry, that was, need to say correction there. Q3 sales 71.9.
News to him.
Yeah, 71.9 million versus 59 million in the Q3 sales.
Spencer was just giving you a preview of Twitter's news with the CFO
Yep.
leaving the company. But we'll get to that there in a second. What are you thinking here on Taser? I mean, it's a
Oh.
big 2-day move.
Big 2 day move, already eroding a little bit here. Not much though. Pre-market high comes in at 26.70. This is a weird chart because look at the dailies here. You got that big gap down, so maybe you can work your way into it, but basically a gap between 26 and 28. Now that we've come off that pre-market high, to me 26 is a significant number. That was your high on October 3rd. Let's see how the stock acts there.
Also reporting earnings last night, we had a couple. We had Solar City. Let's go to this one, SCTY. We know this is more of a Tesla tracking stock, at least until they say the deal is on or the deal is off. But Solar City is trading up about 17 cents here in the pre-market. If we look at Tesla, it's trading up as well. So again, if you're trading Solar City, you're looking more at Tesla. But what did they say last night in the earnings report?
Q3 EPS a $2.32 loss versus a $2.29 loss estimate. Revenues of 185 about million versus 170.6 million. They do see Q4 EPS that came in a little lower, a $2.65 to $2.55 loss versus a $2.43 loss. So A little lower there. Losing money regardless.
Joel,
I don't know.
technicals.
What do you want? You want Solar City or you want Tesla here?
Give me the Tesla technicals because Solar
Man.
City's just following
Oh,
that. And you had Tesla. You had a nice rally in Tesla yesterday. Obviously, had a sharp rally there and everything, but it did make a low on the move down at 183.95. This chart still is not that pretty. There's a lot of prettier charts out there. I'll say it that way.
Dennis, I was just gonna say, you know my old school technical analysis. It doesn't work in Tesla. So get rid. That's all I can say.
Tesla does its own thing.
Yeah, it does its own thing. Let's see here. Tesla looks like you got a little seller at 193. That's what I can, that's what you're seeing here from the pre-market. I'll show you. So keep an eye on 193 on Tesla. That's really the only good information I can give you on that.
This morning, we got some retailers that reported. We'll give you the good one first. Kohl's blowing it out here. KSS trading up 7% here in the pre-market. Huge rally for Kohl's there yesterday. Rally from 43 up to 45.70. Up another 3 points here today. Spencer, what did Kohl's have to say?
This must be because I shop there all the time. Q3 adjusted EPS 80 cents versus 70-cent estimate, so a nice 10-cent beat. Sales 4.327 billion versus 4.33, so a little lower there on the sales estimate. They reaffirm their fiscal year adjusted EPS. They do see also comps down 1.7% in Q3.
Joel, KSS.
2 point rally yesterday, tacking another three on it right now.
Coming into a big hole number of 50.
Yeah, need I say more? The
50's huge.
Dennis,
What's the pre-market high?
Pre-market high 49.90.
Oh man, these work, these big hole numbers. Call it simple, call it whatever you want, but it is simple. Like the simpler, and I've a 17-year career, I've always said this. The simpler I make my strategies, the better they are, and that big hole numbers just work. Got up there 49.90. If you're shorting ahead of that 50, you were making money here obviously this morning. I don't know how much stock you could have got off there, but I'm sure you could have got some in the 49 handle. It's now down the 48 handle. I think 50 remains major resistance.
Dennis,
Tell broke.
Yeah, why don't you just reiterate why those whole numbers come to be such significance?
Because there's institutional size up there. So that's, the main reason is that institutions, and obviously the options, the expiration or the option strike prices are there. So when you get the strike prices there, then you have other, even retail interest, but mostly, institutional ownership there. And they use big whole numbers. It's simple. 50, 55, 60. Dump me 150, dump me another 155, dump me another 160. Whether they're throwing the order out there or using an algo, they still use the big whole numbers. And big orders block stocks.
And the high-frequency traders identify those orders, trade ahead of them for as long as they can, making pennies and nickels and dimes, and then you kind of have. We haven't gone over your tractor beam thing in a while. Maybe we'll run that one day next week. But Kohl's, is it going to lift the other retailers?
Well, not Macy's, because Macy's reported too, and Macy's is actually trading in the red. And if you look at this, Kohl's, Nordstrom have all come back nicely from the low. Macy's really it's come back from the low, but not nearly as much as the other ones have. Macy's was trading higher on this report, but they must have said something in the conference call or something happened because they pulled the rug out from under it about 20 minutes ago, and now Macy's is in the red. Spencer, what are the details?
Q3 adjusted EPS 17 cents, sales 5.63 billion versus 5.65 billion. They also raised their fiscal year sales outlook and reaffirmed their fiscal year EPS outlook. They did say that Q3 comps were down 2.7%, and comps on their own plus licensed brands basis were down 2.5 to 3%. I don't know why they're hitting it though.
Just found a reason. Macy's is just not loved. There's a few stocks out there that just are not liked, and Macy's is just one of them. That's just the bottom line. It has a good report, and it gives it, even the last time it reported earnings back in August, had the gap and go, and then eventually filled the gap. So Macy's is just one of those stocks that they just do not like, along with Valiant.
Throw out the high, 40.24. You could keep the low there, the low of the pre-market session, just made at 37.40. Big area, though. Number of the week, of the month in Macy's is the 36.80 level. Two lows there last week, 36.75. That was the low yesterday. That's your major support. So I like it under 37. Little high here. Where's that? 38.09.
Ralph Lauren RL trading up $2.50 here in the pre-market. I didn't catch the Ralph Lauren numbers. Are they out, Spencer? I'm assuming when it's up
They
$2.50, they are.
they were out at 803 Q2
That's
EPS.
why, because
Yep.
I'm on a radio show. That's why I didn't see them go by. What are they?
Q2 EPS $1.90 versus $1.71. Revenue 1.8 versus 1.82 billion. They also are maintaining their fiscal year 17 guidance. They see Q3 revenue to be down low double digits to low teens on a reported basis.
So
Joel, what are you thinking here?
oh, do you even have to ask me what I'm thinking here?
105?
A stock that traded 96.10 yesterday and now is trading near 105. I think anything over 105 is gravy. Excuse me, anything over 104 is gravy. I see a bunch of highs, 104.60, 104.79. That's where we're traded now. I see the pre-market high at 105.10. Dennis, double steak dinner.
105 is a big level, but double steak dinner. Here
Double
comes the
steak
thing.
dinner, 2 lunches. It doesn't close over 105. So I owe
Oh,
you
man.
four
No, 'cause
steak dinner.
105 is huge resistance. I'm not going to do that. But what I will tell you is I'm not shorting it there either because I have seen Ralph Lauren rally 10 points on an earnings report, and this is the craziest market that I've seen in a long time, at least from going up. When you rally 100 SP handles yesterday, so I wouldn't be surprised this thing just blows through 105. But I'm not betting on it. I'm just going to sit back and watch the fireworks. Technically, if we were in a different market, I would say 105 is huge. Maybe I would try to short. I am scared to short anything in this market here right now because this market, just when you get on the wrong stock, it just catches fire. I mean, these biotechs yesterday were absolutely insane. I mean, we basically had a flash crash up in a lot of these stocks, like at the open. Look at Celgene. The stock was trading up sharply there, but here, if we just go to, the chart, and the day before, obviously, Trump came in, stock closed at 106. You know where it goes yesterday? 127. All of a sudden, Celgene's up 17%. Is Celgene really worth 17% more because Trump just got in? I mean, just because Hillary's not there to, put pricing caps on, Trump really hasn't said too much about it. How do we know he's not going to do the same thing? We don't think he's going to. He's less regulation, which is probably good as well. But at the same time, these rallies and these stocks, it's almost, it was almost time to ring the register, I think, on a few of these things. If you could have caught it at least at the open, there was some great opportunities there to probably lighten up because a lot of these pharmaceutical stocks, Celgene, Biogen, Pfizer running over 10%. These were just opportunities maybe to lighten up.
Yeah, Pfizer, big move. Celgene did back off its high, closed at 120.07. 127 was the high, so $7 off the high. I expect to find sellers ahead of 127 there.
Just a couple other ones just looking at from yesterday. Bristol Myers was up huge. I did lighten up my Bristol Myers position there because it was just a big move really fast. Gilead touched up to a critical $80 technical point. I mean, this was a stock 4 days ago that made a new low on the move, $71. Boom, it's back up at 80. I mean, there is value here. I'm not saying short these things or sell these things from a long-term perspective, but if you are in these things from a swing trade perspective, I'm ringing the register because there is, that is a big move there. It's a lot of money really fast. A lot of times these stocks do tend to pull back in. I love these stocks on pullbacks. Like I said, my investment portfolio has been, did very well yesterday because I'm so heavily into the drug sector. But that being said, when you get pops like this, I think, lightening up isn't a bad idea. I mean, Pfizer's trading a little bit up here this morning too. They're talking a potential spinoff there, broke by Reuters there last night, but closed at 30, goes up to 33.5, up over 10%. When is the last time you saw Pfizer rally 10% on no company news?
Probably like during the flash crash and stuff. Angie, baby, she closed out 75% of her longs in biotechs.
Fantastic.
Yeah, fantastic, Angie. And what about if you talk about the dogs barking here? X U.S. Steel.
Oh,
What a boost that stock got.
incredible
Yes.
move.
Yep. Look at
The
that.
steel stocks were just a monster. Even Nucor, and I've got Nucor in my portfolio, and it took everything in my power not to sell this yesterday, just because it was so much so fast. I believe Nucor is still best of breed. I like Nucor from a long term. It still has a 2.5% dividend. I've had it in my invest portfolio for the better part of 6 or 7 years. But when the things pop in 14, 15% in one day, it's hard not to just say, okay, I think I'm going to take some profits here.
Bob Wire sold some BMY yesterday. Dennis, this is kind of I mean, this is something that was in your longer term
I sold
portfolio.
it. You know why? Because I was looking at it and I think I was early on it. I bought it at 55, and this was one, and I'm not a big, I'm not one that always just sells because I got my money back here. It was a reanalysis of it. It was a huge move yesterday. Its multiple's a little bit higher than the other ones in the drug sector. Like I did not sell my Gilead. Long term, I think Gilead is just too cheap. But Bristol Myers really still isn't that cheap. We still don't know. There's a wild card, the drug obviously that knocked it down from 75 to 62. We don't know if they could eventually clean that up and get that drug back in the works. But I just think it's a big move really fast. And I think I'm going to get these another shot at these stocks on the cheap. So right now, I think in the financials, and I have no problem if you're taking profits in the financials and the biotechs because it was just too much too fast. I felt yesterday. You look like you're getting a little bit of a follow through here again today. But I think when the dust settles here, I think a lot of these stocks will pull back and give you a second shot to get in.
Bob Wire just you answered his question there. Do you think the bank stocks are overdone? XLF. I don't know what
They're
is.
cheap too. You're talking about two sectors, and I don't know if the market was coming in, but the banks were cheap too. The banks and the drugs were very cheap. We've been talking about them on the show for a long time. Um, they're cheap overall. The question is it just too much too fast, and do you get a chance to get them again? And here's Bank of America's up another 40 cents today, 1838. Full disclosure, I have started a short position here in BAC. It's a little bit of calling the top here. I'm not sure if that's a good idea or not. It's also I've got it hedged with some other stuff, but it's just such a big move so fast. It's hard to just say, this is the top or this is the top because the thing just keeps going. Like it could see 19 today, who knows? But it's just a big move.
Bob Wire, Ed Parker, Dennis, they did the BMY yesterday. So getting some good trading ideas here from the show. Great job, guys. 1850. Dennis is looking at a whole number here in BAC. Bob Wire, I mean, depending on your positions, I don't know all what you trade, but if you think that something's overdone, let's say you have a 200 share position long term in your portfolio, doesn't hurt to sell 100, or it doesn't
No.
hurt to sell like I don't know what you could get for any kind of premium in the Bank America calls, but there's a lot of ways. If you have that feeling, you just don't have to sit there in action. Or something like Bank America, you could pick an area on the downside here. Like I'm going to hold on, I'm going to let the rally go, but let's say if it dips below 18 bucks, so that way you're not trying to pick a top. You might be missing out on some profits on a little bit of weakness, but maybe you sleep a little bit better at night.
I mean, fundamentally, it makes sense that the banks would rally yesterday. Less regulation and probably under a Trump presidency here, and that is good news for the banks. I mean, they have been regulated to death here, and that is one of the main drags that have been on the stocks. A lot of them have nice dividends. They've come back a long ways from the financial crisis. Whether we're out of the woods here on stuff like Deutsche Bank, as Deutsche Bank's come up nicely from the lows, and all the European banks. I don't know right now, but I'll tell you, from a fundamental, just looking at, book perspective, these things are relatively cheap to where they've traded over the years. And that's, a recipe for, once they start going in favor to rally a lot in a short period of time. And that's what we're seeing here. And you could see some follow through in these things today. So I don't know if I can go out here and start short. And like I said, I've got a little bit of Bank of America that I've started, but again, I'm hedging with some other stuff. So I'm mixed here on the banks.
Yep. All right. 1850 there. That 1848 pre-market high. Keep it high. See if there's some size in there.
Go to Twitter,
Twitter.
TWTR. Huge rally there yesterday. The Trump rally helping Twitter. Pulling back here last night. I did buy the dip on this one. I almost got the bottom bots from
Yeah.
1805. I scalped it though and sold out at 1850, so I'm already out. Back to
Dennis.
1868. CFO leaving the company. Dollar pullback on that. It looked like a buying opportunity. I think it was at
A
18. I don't
dollar?
know at 1868.
They
What's
hit
that?
they hit that thing a dollar? A
At
dollar?
18, yeah, I know. I used the big whole number and I bought it 1802, 1805, and I was like, I think the 18 holds. It did.
Oh.
It held right on the kisser, so I took basically no heat on that. And stock obviously popped back up. I mean, I was in the trade for like, I don't know, 3 minutes or 4 minutes, and I was able to get out at 1850.
Wow, big time volume trading on that too. On that bracket where Dennis bought the bottom, 500,000 shares traded. So, wow, man, what a dip, and now you're back up. Man, if this thing gets back near 18, boy, oh boy, what a good buy. I mean, Adam Bain. I mean, I'm gonna talk to Sean about this and see what he thinks about it. But to me, when I see a stock have a strong day like that and then goes down on, I mean, I guess it's fundamental news, but it's not earnings or anything. And they had a big night on the election too.
But this is the guy who's like in charge of their like marketing and stuff. And
Well, then I
and,
think
like,
it's good news. This should be up $2 instead of down 50 cents because
Is that what he's in charge of? I never even looked
I
at
think
that.
I think he like yeah I think that's part of it. And that's not all of it, but I think that's part of it.
He was a key player there. We'll say that. When stock falls a buck on it, he was a key player there. You know what the only concerns, and and I think they were touching a little bit of this on CNBC, but I get thinking, okay, well, this guy probably maybe wanted to sell the company. I was thinking, and
There you
CNBC was
go.
saying the same thing. If he wanted to sell the company, now he's out. Maybe it's an indicator that they probably aren't selling the company anytime soon.
I have to agree. I have to agree.
So
I'm
that's
not,
telling you maybe the deal's off the table. Something to think about there. If you're still speculating that Twitter, it's all about the deal. Now you're losing
there's
one of your
no
key players here
deal.
too.
No deal.
No, I don't think so either. So I'm torn. I think they're going to buy the pullback here, though. I think there's a lot
For
of
sure.
people who like Twitter. They like the breakout yesterday. This is the market that buys dips right now. Again, just all of a sudden. And I think they'll probably buy this dip. They bought it to 1867. It's now 60 cents off the lows, but you get anywhere down near that 18 or 18 and a quarter
Oh,
again. I think they find buyers.
in this chart too, and there's no like, I have no data to support this except just looking at this chart. You went up to 25. You almost hit 16. It just seems like this thing should be. It's gonna fill these gaps on the upside, Dennis, and there's some big gaps to fill. I don't know. This thing just.
You think so? You think I don't know if it's going to fill those gaps. Maybe,
It will
but I
fill
think
the.
it's going to take. I think it's going to take a buyout to fill those gaps.
No, Dennis.
You think it can get up there on its own without any fun? I mean, this crazy Trump market, who knows? But you think it can get up to like $24 without a buyout?
Can you
I don't think
can
so.
you give me a good market on this to get one of my steak dinners back? Because I lost it on
Well, it's got
Twitter.
to be no rumors, not on rumors. It's just pure on company fundamentals. I'm not going to let you get by, okay, there's a huge rumor that comes out and, now all of a
Oh,
sudden it's trading up, 20%, and then the rumors don't materialize and you take me for a steak dinner. You were saying that it's going to do it on its own company fundamentals. So I don't think it can go to $24 on its own company
Dennis,
fundamentals.
Dennis, we're gonna have to talk after the show because
Which
you have
kind of
never put
issue?
these kind of caveats on things like this before. You've
How
never.
we work.
No, you're changing the game. But
One rumor comes out and the thing will be at 23
yeah, but
bucks.
if
So that's why this market's crazy like that.
well,
So I can't just give you a steak dinner on a rumor. I want to see, see this company really turn around on its own. I don't think it can get up to 23, 24
okay, I
bucks.
got a
But
good thing. But Dennis, rumors can happen on the downside too. You know,
what's going to be the rumor on the downside, though? That to drive
uh,
it down, to make a gap down.
like did Dorsey's leaving or something like that. I mean, they hit
You
it when
probably
it's.
rally it on Dorsey leaving.
All right. Final thing, you can have
At
14.
at 1860 longer term, I don't mind Twitter here.
1470 versus 2270.
No, I just got done telling you.
All right,
My
move
last
on.
sentence. I don't mind it here. I'm actually kind of on the same side as you at $18. I don't own it in my investment portfolio, but I'd rather be long it than short it.
Well,
I
I
just don't
do.
think it's going to 24.
Okay, let's move
So.
on. We're boring people.
1 minute here before we get to 8:30 imbalances. I'm really interested in that data, so I will pop back to it. But just before we get to that, let's talk a couple more quick stocks here. IBM getting upgraded here at Bank of America this morning. Big Blue, nice return rally there yesterday. Got hit hard at the open like everything did. Went all the way down to 151, closed at 155. Now it's up at 157 and a half. I'd love
Ah,
this to get to 160. 160 is huge. I will try it from the short side if it gets to 160. I'm not sure if it can get there.
I would have loved an instant replay here to buy this thing going through 155 and change. You had 3 consecutive highs there. Also, it's filling a gap from early October. So, man, I don't want to chase it buying here. Dennis gave you your resistance. I would see it's 156 is the area that I'm talking about. Love to see this in a lower 156 handle today for a potential long entry.
Okay, just waiting here. 15 seconds till those imbalance numbers there. I do think that they're going to be interesting here. So that's why I kind of just wanted to give them hot off the press to you here. But here we are, 8, 7, 6, 5, 4, 3, 2, one. What do we got from imbalance land? Bank America, 250,000 to sell. Like I said, I'm short Bank America. Also looking Wells Fargo, 106,000 to buy. Pfizer, 303,000 to buy here on Pfizer. That's interesting just because they talked about the spinoff here. Spencer, can you give us that news on the Pfizer? Because I've talked about it a couple times and I didn't give the actual headline there. What was Pfizer saying about this potential spinoff?
Oh boy, iBrands. No, I'm sorry, that was a different thing. It was yesterday, right? It was a sale of the consumer health unit, including Advil and Chapstick brands. Does that help?
What do you think here? What do you think on the technicals here, Pfizer? This has been such a good move. I own this in my invest portfolio. Part of me wants to ring the register, but I've had Pfizer forever. Like I said, I bought it back at $15 during the financial crisis. It's such a big move there. I don't know to hedge it. I just think I think you're gonna get a shot here on this again.
$34 is like your major resistance.
Huge.
Yeah,
Gets up
so
there. Huge levels gets up there.
Yeah, so if it gets up there, maybe. I mean, you've got a lot of companies selling up in that area. Not, they've talked spin-off before though, so I don't know if this is not like.
And it's not a huge spinoff.
Yeah.
It's they're talking a $14 billion spinoff on a $180 billion company. So they're talking about less than 10% of the market cap. So it's not like, whoa, they're separating the company. It's just spinning off a little piece potentially.
Yeah.
So I don't think this is, but if they get crazy, which they do, that $34, that looks like a beautiful level.
Yeah, well, first they got to get through yesterday's high. That's what I'm focusing on here. Haven't even taken out 33 yet. Yesterday's high, 33.37. So look for that ahead of $34.
Alibaba, 142,000 to buy here. That is significant as well. Give us your technical thoughts, Baba.
Baba kind of did not participate yesterday.
China.
Right? Yep.
Chinese stock.
Yep.
They weren't participating yesterday.
And neither was Apple. Apple had a weird day as well.
But think about Apple too. So much of their manufacturing is in China. I mean, is Trump going to try to put, some tariffs or do something there to try to bring some of those jobs back here? He's said it in the past. He's mentioned Apple in the past. So I think that was a little bit, people looking at that and saying, I don't know if I want to own a company that does most of its manufacturing in China.
Too much. I'm not necessarily short in Alibaba here at 98.33, but man, when you come off a high like that and you come off with volatility, you come off with bad earnings here, I just think you're going to run into a lot of company here trying to sell the issue, especially if it tries to get into triple digits. Your 2-day high, 99.59. One day you're stuck over at 162. So it just looks like the tide has turned here a little bit on Alibaba, looking at more to the downside.
Still looking at these imbalances here. Morgan Stanley, 251,000 to sell. So there's some institution that looks like it's taking some profits off the open, but these things are up so sharply. They've traded so much volume. You wonder if even though they have sell imbalances here right now, that they're going to turn around and probably end up, opening quite a bit higher. I mean, that's what the market's banking, because Morgan Stanley's still trading up 30 cents despite having that 251,000 share sell imbalance. Although Bank of America's coming a bit.
All right, 8:33 here, Dennis. We've covered a lot of issues here. Let's just
couple more upgrades.
Sure, let's give me.
Or do we have a couple from the chat? Do you want to go to the chat?
I don't. We got one thing about gold here, and it's a little bit shorter term. I believe it was Ed Parker. Is it that who's asking about gold here? And man, that thing, it got a big ride yesterday, up over 1,300, and then lost it. Still trading up $4.50. Man, oh man, I guess I'd say more the 1250 area when you get a bit. Oh, that was the 2-day pop that you got up near 13. No, that was yesterday. I don't know. Don't have a great feel for the gold chart. What I'd take a look at though, if you take out 1268.10, I don't think you'll have any problem getting to that 1250 level.
Priceline, Expedia both get upgraded here at Stifel. Priceline getting upgraded to a buy. Expedia getting upgraded to a hold. They had a sell rating on it here before. PCLN, we know, had a really good report 2 days ago. Had an inside day yesterday. There's not a lot of stocks that had inside trading days yesterday. The Priceline was one of them. It's trading up another 10 points here. It's sniffing up there towards the 1600 level here now. What are your thoughts on PCLN?
1589.21, is that the all-time high there? So 1600 maybe. Keep an eye on a round number like that. trading up at 1585. Let's see what they do at that high, 1589.20. Shake Shack, we did do that. I think we identified 37 as a resistance level. Boom, boom, boom. Trading up at 36.59. We saw some highs there at 37. All right, Dennis, 8:34. We're going to take a quick break, and we're going to bring on our first and only guest today, and he's good with the technicals, Greg Harmon, founder of Dragonfly Capital Management.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Condon, along with Dennis Dick and Spencer Israel, and we have Greg Harmon on the line, founder of Dragonfly Capital Management. More than 25 years of trading experience at several different firms. Greg, how you doing today?
I'm doing just fine. How you doing?
I'm doing well. So in your 25 years of trading, where would you put the activity in yesterday's action? Where do you rank that up there?
That was crazy. Yeah. I mean, I'm sure there's been a lot of discussion about the narrative that goes around it, from oh my gosh, Trump might win a state, to oh my gosh, Trump might win everything, with futures falling 100 points on the S&P, and then cooler heads maybe, or a view towards more fundamentally driven things like improving earnings and improving earnings forecasts, leading to buying back and totally ripping that thing higher again tomorrow. It's just crazy.
All right. I mean, does it make you want to, getting up here near all-time highs? Does it, make you think of potentially, fading this move up here? Or are you just gonna wait to see momentum fades and maybe catch it on the downside before it, before it peaks?
Well, I may be the exception to the story here, but back in September, I was talking about the S&P breaking to all-time highs being a major long-term event, and that I've got an Elliott wave chart that I put out a lot and gets a lot of comments that suggests that we may be deep into wave 3 going higher now, that could take us above 2,500 over and possibly as high as 2,900 in the S&P 500 before we get any kind of major change. So I'm quite bullish right now, and I think that earnings momentum is backing it up, and with the election out of the way now, we'll start to see some money come in.
All right, let's move on to some individual issues here, and you want to talk about lock earnings, LifeLock, LOCK.
Yeah, LifeLock. Here's a stock that I added to client portfolios yesterday, and I added it because it broke to nearly a 2-year high out of consolidation. So this stock has been moving higher since July last year with some fits and starts, but yesterday it broke out of a 5-month range, and I like this one to go a lot higher now.
So where do you give yourself? Where would you limit yourself on the downside here? Would you wait? I mean, if you're looking for, $2, $3, I mean, you have a mental. Do you say, hey, if it comes back down under 16, or well, what's your risk reward?
Yeah, I mean, I see new highs coming on this, so that's like in the 23 area. And if you've got that kind of a long-term target on it, keeping a stop around 16, the lows from October is probably a good place to limit your risk.
All right, bonds in the TLT look like a disaster here. I think I saw something 80% probability that we're going to get an interest rate hike here in December. Kind of deja vu all over again. That happened last year. What do you think here? Are you going to dip your toe in the water here on the bonds or the bond equivalent TLT, or just stay out of the way of this train wreck?
Well, I think if you want to get involved with bonds, it should be to the short side. If you look at, again, long-term charts in the bonds, you can look at a 30-year move higher in bond prices that peaked about 4 or 5 months ago and has been reversing since July. This month looks like it's accelerating even lower, and you would have thought with a 5-point drop yesterday, we may get a little bit of a bounce today, and it's just not happening. This, you hate to say it because it hasn't worked out for anyone that has been trying to short bonds, but maybe this is the big one.
The big one. All right. Boy, these defense names, as expected, got a boost from the change in the White House. Nice run-ups. Lockheed Martin just hit an all-time high. This was actually a few months ago. I mean, what do? Let's say you played it right going into the election. These things got, Lockheed Martin 230, now 250 here. What kind of strategies would you talk about for people along some of the defensive stocks?
Yeah, looking at the defense names, and you could probably lump some of the banks or financial stocks like Goldman Sachs into that too from yesterday. These things were up 10% more in one day. To me, especially with it being this close to November expiration on the options, it's time to sell some covered calls if you're long these things. Get some income in. Maybe they keep rising on a Trump presidency and rebuilding the military and tossing a lot of money in there. But that's a lot to move in a short period of time, and that to me means sell premium.
All right, I got to ask you about Priceline. I mean, I guess besides Nick Shaheen, you're one of the only people that are willing to comment on this beast here. Received an upgrade, had real good earnings, getting up near 1,600. What's your look here on Priceline?
Well, the way I look at it, Priceline had a nice run up from 2012 into a consolidation pattern that started in early 2014. It was building kind of a wedge, and the earnings move bopped it out of that wedge. And with the move out of that wedge, technically, you look at maybe another 600-point move to the upside.
Oh, 600?
So 2,000. I'm
Wow.
not going to say it's going to bounce right there and move straight line there. Maybe we come back and retest the 1,500 area, but this is another one of those long-term price breakout charts.
Yeah, hard to fight the trend here in Priceline. And it's interesting, the Priceline earnings are good. TripAdvisor not so good here. So little bit of a difference there between two similar companies. Also, Greg, you cover the whole gambit here. You can talk about Priceline, which is a $1,600 stock, maybe soon to be a $2,000 stock, and then you also like to cover Wendy's. And I heard Wendy's is bringing back their taco salad that they had since 2000. They haven't had since 2010.
Well, I haven't heard that, but tacos are hot now, right? If you look at Wendy's, here's another one that has come out of a broad consolidating pattern, maybe a symmetrical triangle or maybe just an ascending triangle, but after a long move up and a almost 2-year consolidation. So a breakout here, which we are seeing happen now following earnings a couple of days ago. You're looking at the move into that was from 4 to 10, so it's a 6-point move out. And look at 16 to the upside as a potential there.
Can we throw you a couple stocks from the chat here? Do you have your charts available?
Yeah.
All right. Big move in the financials here. We had Bob Wire asking, maybe time to ring the register here in some of these stocks. Let's start with Bank America trading up in the pre-market monster day yesterday. Give us your technical take on Bank of America.
Yeah, Bank of America did have a huge run up yesterday, and technically it did move into overbought territory, but it happened on huge volume too. So maybe it stalls here for a while. I would not look at this as one that you'd say it's time to sell it, because technically this is one of the few stocks, along with Citigroup, that has not done well since 2009 in the banking sector. It's still one of those, if you pull back to a long-term chart, is only retraced something like 22 or 23% of the move lower. It's got a lot of potential upside if it can get through the 1920 area. So instead of selling the ring and register, maybe it's time to protect to the downside. Put on a put spread as protection, and then sell covered calls to reduce your cost of the protection.
Wow, 18. I just pulled up the weeklies here in Bank America, and that looked like a huge level. Just kissed it yesterday. Now 1850, 1848. That was back. That was your high in June of 2015. So nice move in Bank America. All right, let's throw one that went the opposite way of the price line, and that's TripAdvisor, TRIP. Take a look at that. Give us your technical take.
Technically, this one looks as ugly as the move that happened, and with a last vestige to hold at the 53, 52 area from what we saw back in February 2016. Below that, there's not any real support until you get down to like 43, 44. So it's got potential to look a lot worse before it gets better if it can't stop right here.
All right, we should have went to Shake Shack when we talked about Wendy's earnings. What you got for us on Shake Shack? Good earnings report. Nice pop here. I was kind of keying on the $37 level. Can you give us an area here in Shake Shack?
Yeah, let me get this one up here. Yeah, I mean, your 37 level, we're just about here. I'm not sure if we hit it
37.09. That was
pre-market or not.
After hours, yep.
I see. Okay, yeah. So, that area on a weekly basis, a weekly chart, it's been a lot of consolidation between the 32 and 38 area, somewhere in that range. So the big thing on the weekly chart here, 36.65 right now, if it can hold that and stick there through the end of the week, puts it back over some long-term moving averages, which would be a good thing. But it's still got some rough waters ahead of it until it can get over 38.5, say. Looking better, and that's a good thing, but still a short-term move as opposed to a long-term investment. Short-term against 33, something like that. Probably, if you can stomach that big of a move, a $3.50 downside. Is probably a good speculative play.
All right. We're just going to finish up here with a couple stocks that kind of maybe surprised investors the way they reacted with the change in administration. Smith & Wesson hit 30.50 in the pre-market, came down to 23.50 and bounced. Boy, a $7 move in a $30 stock. Breaking down on support here, I don't know, gap to fill near 22. Give us your outlook for Smith & Wesson and also Sturm Ruger.
Yeah, Smith & Wesson, that was a strong move down yesterday. You're seeing a small bounce right now. It's about 24.5 in the pre-market. But if you pull the couple of days around the election out of it, it had been in a downtrend since August. If you're someone who's looking at the current administration going out, and they've been against guns, and now you've got a new administration and maybe more friendly to guns in there, you might think that that's going to change. But the chart itself doesn't really look like it's got any promise to it at this point. More like it's got some more downside to about 21.50.
All right, and then RGR.
RGR. Yeah, RGR had been doing a lot better until yesterday as well. But that one seems to have fell down all the way to support at the 54 area. If it can't hold 54, then I see 49.50 as the next area where it could get some support. Below that, it could get fairly ugly.
We've been on the line with Greg Harmon. He's the founder of Dragonfly Capital Management, joining us here on Benzinga's Pre-Market Prep. Greg, thanks a lot. Great talking with you as always. We'll get you back on again soon.
Thanks, Joel. It's been a fun time.
All right. S&P's losing a little steam here. 21.68 and a quarter mid-range on the day. That's the level I'm looking at here. Also, regards to this Twitter and the resignation of Mr. Bain here. I mean, you got to wonder, was it, maybe was he shown the door or did he just resign on his own? So
It sounded like he wanted to do something on his own. It sounded like he was looking for new opportunities, is what the press line or the press release said. So I'm not sure. They're probably going to say it that way no matter what happened on the inside. So,
okay.
in any regard here, the stock has come almost all the way back. We're up here at
I
18.82,
know.
so we're only down 28 cents now after being down, almost 5% last night on this news. So it was a buying opportunity, that 18 bucks. Should have held. I should have held.
Oh,
Scalper
Dennis,
blood.
next time
Scalper blood.
you got to call. I'd already be looking good on my 22.5 bet now, right? If,
These imbalances are just mixed. It's going to be, what's looking strong again here today? It's the same things that were strong yesterday. The biotechs, the drugs, and the financials are all trading significantly higher. And then you got a mixed, there's a mixed bag. Most things are higher here. But from what I'm seeing, we're only up, really, when you put it in perspective, 0.42% on the SPY. And you're looking at it here at the stocks. It seems to be trading much higher than that. So one of two things have to happen. The S&P future is going to have to start rallying here, or the stocks prices are going to have to start coming in, because there's a big separation here right now. I'm just seeing everything trade up 1, 2. Like some of these financials are up 2-3% here right now. The XLF itself is only up, well, it's up 1.5%, I guess. But I don't know, unless there's going to be the same thing as yesterday. There's going to be some sectors that are just going to get annihilated, which happened yesterday. Some of your defensive names. It looks kind of like a continuation of yesterday, though.
Yeah.
I'm just looking. Phillips trade down, RAI trade down. Your defensive yield plays, which got murdered yesterday, are looking to get the beats here again. This is day 2. On day 2, a lot of times you will see a turn around 10 o'clock. It's my 2-day rule. And the reason for that is you have a lot of people that say, "Whoa, the financials, those are awesome." They call their broker because you have your guy's got a day job. He doesn't know anything until he comes home from his day job at 5 o'clock and he sees what the banks and everything did yesterday. He calls his broker up the next morning and says, "These banks look awesome. I want to buy these." He's late to the party, though. So all these orders, all these people late, Johnny-come-latelys that are buying again here this morning, give you another push the next morning. But then that starts to fizzle out. And it starts to fizzle out usually 15 to 20 minutes after the open. So if you're looking to fade some of these moves, if you start to see some weakness in the banks, start to see some weakness in some of your pharmaceutical companies, I'd look for it around 9:45, 10 o'clock. And if you start to see those turn, there might be an opportunity there on the short side.
Big selling balances on the close yesterday, too, so definitely had some institutions lightening up on that. Comments on Disney earnings. We got Disney coming out after the bell here. Stocks being kind of quiet, been range bound for quite some time here. Just under 91. You had several lows in the 90 handle. Now coming up near 95. That was resistance back in August. Can't tell you much about the earnings, but a breakout above 95 looks like some good area on the upside. Breaks below 91. You got to keep an eye on that triple bottom. Dennis, do you have a volume rule?
Do I have what?
Volume. Like, how important is volume to you in your trading?
It's somewhat important, but not very. I would say out of all the tools that I use, you want to know when there's volume. Like, for instance, if I'm looking at the Bank of America this morning, I use it in different ways, a lot different ways than your traditional than your traditional traders there. So, for example, when I look at Bank America, I see 265,000, or actually it's up to a buy balance now, 157,000 to buy, and then I see 1.8 million shares have already traded today. I know that 157,000 share buy balance is meaningless, so I'm using volume in that way. I'm using it in different ways. But if I'm looking at a chart and saying, oh, well, that was trading up, on half the volume that it normally trades, so that level really isn't relevant there now. I don't follow that. So I don't subscribe to that theory as much as some of your other guys. So, I use volume in different ways. I use it, to identify order flow. But that's, the main reason that I'm using it more from order flow tactics as opposed to technical tactics.
And also in the pre-market trading, when you see a stock, like for example, I saw what was trading at 105. It was Ralph Lauren. It was trading up just on like odd lots.
Couple hundred shares.
Yeah. You don't.
Yeah, so that's meaningless.
Yeah, another odd.
So that's something to consider, on the pre-market trading. Exactly. That's a great example there too, Joel, is, stocks trading up substantially on its earnings report, trading millions of shares. Well, it's probably going to, be opening up there as opposed to something trading up 5 points on 100 shares. Well, who knows? It's 100 shares. It doesn't even mean anything. So that's where I'm looking at volume. But, I think, if the question's coming from a technical standpoint where you're looking at a chart and then you're looking at the average daily volume and seeing if it was higher or lower and trying to figure out if the move was real or not, it's digging too deep for me. I keep it simpler than that.
Alibaba, we got some people anticipating Singles Day tomorrow, 11/11. I'm looking at the chart on this one, and I don't think I'd be like playing this like from the long side, looking for a big boost here and trying to sell it. I think if I did have it long and you got rallies to these daily highs and stuff, I don't know. You came off hard off here off 110. It was also fundamental news. They weren't that happy with the earnings here. So if you get a big pop on Alibaba here, for me, I'm looking at more to sell out of a long or initiate a short more than like trying to buy. Because these things where it's like, oh, it's Singles Day, get long. I mean, to me, I'm kind of like the last person to get that news. So that's the way I'm looking here.
$100.
Yeah.
Keep it simple. $100 major resistance for the stock.
Fang, let's just take a look at Fang here. Fang
did not participate yesterday. Did you notice that? Well, a little bit, but I mean, these stocks weren't up substantially. They came off their lows, but on a day that it came all the way back, a lot of these stocks actually, were close to closing in the red there. So didn't participate as much as the broad market.
That's actually a good thing for the market, Dennis, when Fang, because that means that, people are, buying, stocks that are just not trading at high PEs and, getting back to the old solid stuff.
Value.
Yep.
That's what I like. Value.
A V with a value. We looked at Facebook had a rally. Still just kind of got some people caught from the earnings. 125 looks to be the big level on that. Amazon still trying to recover here. Couldn't even get back up to 800. That's your big number on the upside. 750 to 800. 750 your major support. 800. That's been the highest level since you had the earnings. Netflix. Let's see. That's just been Woo, Dennis. What do you think about this one? It looks. Is it getting tired yet?
I've had it wrong so many times. Okay. So this is one stock that just got my number. I don't trade it for that reason, but even when I make calls on it, I don't make the good ones there. I've been bearish Netflix forever. I still think there's a lot of companies eating their lunch. I don't like the multiple, but it keeps going higher. So I'm not gonna fight the tape on it. I mean, it looks like a technical, it gets through 120. It looks like a hell of a lot of air below, but it's just that honey badger stock that doesn't seem to matter. They seem to keep finding a way to go higher on it.
All right, Google here didn't participate. Didn't even get to Friday's high. Didn't even get to Tuesday's high on the big election rally. So that's interesting to me. 791.23 trading right there, right at yesterday's high. Next,
still my favorite stock out of the FANG.
795.63. That's your 2-day high. 858. It's time to wrap up the show for today. We're going to go to Spencer. He's going to preview tomorrow's show.
Couple of guests on the docket for tomorrow. We got Andrew Zatlin of Moneyball Economics and his Vice Index, which sort of measures the market based on vices of society. Could be a good time to have him on. Also, we're talking with Lloyd Perlmutter. He is a retail industry executive and advisor, currently the president of Veritas Advisory. So looking forward to both those guests on tomorrow's show. If you missed any part of today's show, you can catch the whole thing again on YouTube right after the show is done, or the edited podcast is on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or PreMarket there. Don't forget to check out Benzinga Pro. It's Benzinga's real-time news platform. That's great if you want to stay on top of what's going on in the markets during the day. You can get Benzinga Pro for free for 2 weeks by going to pro.benzinga.com, or you can call us up at 313-723-2000. Just say you listen to the show, and there is a discount involved there. Please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. So that's it for us today. Hope everybody has had a good morning so far, and a good hope you have a good rest of your day, and we'll be right back with you tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.